I think every single letting agent and HMO student landlord went into the letting season in October of last year with a great deal of trepidation, following on from the season before, where a lot of people actually didn't manage to get fully let. We didn't. We only managed to let 95%. So it was clearly a season filled with all sorts of uncertainty. However, it turned out to be fantastic. It turned out to be our best letting season ever. I think the success is really down a lot to the students, who proved to be extremely adaptable, because of course there were no physical viewings allowed. It all had to be done online. So we made a huge effort to prepare ourselves to offer virtual tours and to have the best photographs of the houses we could. And the students who were locked up decided that the best thing they could do with their time was to try and find a good house. So we let everything bar one flat by Christmas, which was certainly much better than expectations. We had a rent rise of 6.4%. So again, a really good figure in terms of the price per person per week. So we came out of it thinking, this is the new normal, that everything now has to be done via online letting, and physical lettings are going to be increasingly a thing of the past. We shall see with this new letting season, but certainly as far as this year is concerned, it's proved to be a remarkable success.
Yeah, I think kind of reflecting that as a obviously marketing platform, we've seen very similar trends on the HMO side. Again, as a marketing business, we've seen inquiries for HMOs go up a fair amount this year, which again I think may have surprised some. And I think as well, where it differs to particularly the PBSA sector, as Calum's already mentioned once, the seasonality is very much skewed to early house hunting, and HMO landlords and operators didn't have this somewhat of a nail-biting wait to try and work out whether actually students were looking to book their accommodation, because, as I said, most bookings and inquiries for HMOs are very early in the letting cycle.
Yeah, there was definitely, if I may follow up, there was definitely a very good experience across the board. We were not the only landlords, obviously. The guys at StuRents did very well, but you've got a great platform, so that helps, no doubt. But everybody came out from an HMO perspective thinking that was a season that they didn't expect to happen at all.
I think obviously it's well reported that the rise in 18-year-olds is very attractive going forward. Obviously, we're coming out of this demographic dip, and whilst that is very much positive for the industry as a whole, we would foresee HMOs really being the big beneficiary of that. Obviously, domestic students historically have lived in HMOs in the second and third year for a large, for the most part at least. And affordability is the other big consideration, which is always very high, particularly on domestic students' agenda. And if you look at the average HMO in the UK of about £106 per person per week, for most domestic students, that provides a much more viable option in terms of affordability versus something like PBSA.
Yes, I mean, in terms of the way the market looks going forward for HMO students, I think it's still incredibly positive. I mean, the bulk of the students, 75%, are domestic, and that's the exact market that we address. So we're pretty excited by that. The Article 4, importantly, is a directive that the government means that there can be very little, if any, new HMO properties coming to the market. So you have a restricted supply, but yet the demand still looks incredibly compelling, given, as Richard pointed out, the participation rates just seem to continue going up, notwithstanding the amount of the loan that students will be having to take on. And the number of 18-year-olds as a percentage of the overall population is going up. So, that's a double whammy in favor of the HMO landlords in this country. The applications for the Russell Group universities is incredibly robust. And so this model looks good in good and bad times. So I'm looking forward to the next 5 years as an HMO landlord.
Similar thoughts to Calum earlier, in that the performance has been very robust, and we've seen our sort of best performance in cities with multiple universities, especially if it has a Russell Group university within that city as well. And we've seen booking velocities essentially delayed to the spring and summer period. So we saw a massive number of inquiries as the economy opened up. There was more certainty. within sort of the academic schedule, and universities were announcing their intentions. There's been a few challenging markets that I would say. So generally, markets with sub 15,000 students with one university in there in the town, that's been quite challenging to lease, I would say. EU numbers also have had a big impact on some of those universities as well. I think numbers overall have dropped by half, but it was particularly acute in some of these smaller university towns. Overall, there's towns that have done very well. So Glasgow, you just can't get a room in Glasgow at the moment in the West End or the city centre, similar to Manchester. And I've heard some students in York are being placed in Hull because there's a lack of supply within the city as well.
To kind of give a bit of colour in terms of maybe if we go back a bit further, and obviously when COVID originally hit, I think what we saw, so for the 2020 season, really, obviously we saw a lot of very positive numbers being released by UCAS, particularly with regards to non-EU student growth or acceptance growth. And that's very positive for the long-term health of the industry. That's not in question. But I think as most operators found out when we were kind of at the height of the pandemic, those UCAS numbers didn't translate to heads on beds. And actually what we've done is we've looked at things like, for example, the issuance of Tier 4 visas to Chinese students. And actually, if you look at those numbers for the year ending September 2020, for example, those were down by 59% year on year. So that really reflects the fact that whilst students wanted to study in the UK, they just simply weren't prepared to travel. More positively, we've looked at those same numbers for 2021. And whilst the data only goes up to June currently, we're seeing a 177% rise in those issued visas to Chinese students. So that's much more positive. And I think that kind of reflects what Fathi was saying, in the sense that demand has been slow in the PBSA sector, but it's definitely ramped up, particularly over the last couple of months. So yeah, been a nail-biting year for operators, but at least that demand looks to be recovering, which is positive.
It's quite interesting in that if you look at the long-term trend, historically PBSA has been the Cinderella of the sector. It's the new glamorous purpose-built kit, all shiny, institutional, which the internationals have absolutely loved. And over the last 5 or 10 years, that trend has been really in one direction only. But I think perhaps what COVID has identified is, you look at the HMO sector, yes, it's difficult to access, but fundamentally you've got a ring-fenced accommodation block. Calum, as you pointed out, Article 4 basically means that you cannot build or convert HMOs anymore. So it's ring-fenced. It's being chiseled away by adverse tax positions for mom and pop type investors. And it's being chiseled away by this sort of Airbnb type investor that's wanting to get even more money than from their asset than from students by Airbnb-ing it. So you've got this pool that's being attacked year on year and reducing in size. And at the same time, there's a student population that fundamentally now is growing massively, with domestics who are very price sensitive, and HMO exactly meeting that spot. So there's, in some ways, there's the change in emphasis has come about through COVID, because on the HMO, on the purpose-built side, the international students that we've been so reliant on the last couple of years, they've found it incredibly difficult to physically come to the UK. What that means, though, it doesn't necessarily mean that the purpose-built sector, and London, for instance, probably London is the area that is arguably had the most difficulty in terms of occupation, because it's so heavily, it's been 90%. A lot of the PBSA schemes are 90% let to international students. So they've actually struggled arguably more than the regions in the last year and 2 years. But if you look where the money's wanting to focus and the investors, they are absolutely wanting to pile into London, because they're taking a longer term view. And I think everything we've said is that the universities and higher education generally is doing incredibly well. Domestic student numbers are up, and there just aren't enough HMOs for them. Despite COVID, people still need places to live, and fundamentally people pay rent for the privilege of staying in accommodation. So there's a piece around this sector once again has outperformed at a time of trouble. And beyond that, there is an expectation that, again, a structurally undersupplied market, which it is for students, and a market that is growing in terms of domestic students, particularly for demographic reasons, and internationals for long-term historic trend reasons, remains a key investment area for institutional investors. And as a demonstration of that, yields have sharpened.
As an operator, we are seeing inflation creep in, and in several areas. But any new builds coming to pipeline next year and the year beyond, what is the energy situation? They're going to be looking at their underwriting positions as well, looking at those OPEX budgets. We're seeing the labour market tighten, so we're seeing wages increase, and also the talent pool decrease. You know, if you're a smaller operator and reliant on quality staff, you are going to see that more impactful. And the final point is increases in marketing costs, because attracting these students is not without cost. And because everything has been digital over the last few years, because you couldn't do the usual city-based campaigns, you're essentially bidding against other operators, and the only beneficiary is Google and Facebook.
Yeah, I guess to a few comments, maybe from the HMO side. I mean, we spoke to the last 3 to 6 months various institutional investors that are looking to get into the HMO market, and obviously we've already touched on some of the broader reasons of why that sector is attractive. But I think unlike PBSA, obviously where they face challenges is trying to invest at scale. Obviously the HMO sector has been somewhat of a bit of a black box for the market in terms of little in the way of information. So whilst there are investors that are very much interested in the HMO market, it's difficult. It's very difficult to enter. And obviously there are relatively few large HMO portfolios that can be acquired, which again is in contrast really to the PBSA sector.
You've got a point there, and obviously that's one thing that always comes up whenever we go out and market to people. But what I would say to that is student cribs have successfully invested some 200, if not 300 million over the last couple of years. So it's clearly out there. Secondly, I would say that it's a very local market, and a lot of the local agents and local landlords don't have access to an institutional sales team that they can go and talk to, a marketing team. So actually, you've really just got to get out there and get into the weeds of the local market to find out where the houses and the portfolios are. And when you get in there, funnily enough, they start to appear. So it is out there. It just happens below the surface of the type of news magazines that we and others institutions might look at, but the deal flow is there.
I think the investment funds are really going to focus on it from a macro level on asset classes that are ESG friendly. And student accommodation has a real opportunity here, because if we get the energy bit right, we can make sure these assets are absolutely in line with where we should be in terms of expectation for energy consumption. There are no excuses there, really. If we get the social bit right, well, we are contributing in a very, very positive way to the community and the wider communities, and there's a real role, particularly for the wider operators there, I think. And in terms of governance, there's absolutely no issue as to why the student sector can't be right there at the top of providing the very best governance. So it's a sector of a real opportunity, but it's also a threat for those who are blind to the fact that this is going to be something that's very significant.
Yeah, it's an interesting point.
Yeah, I mean, I would add from an environmental perspective, and getting your EPC ratings down from the HMO side is actually a financial benefit, because now there are mortgages about to be offered out there that if you've got your EPC down to C or D, then you actually get a significantly better rate from your mortgage operator, from your bank.
I think the only other point that may be worth raising is I think we're kind of all aware broadly the market is very attractive from supply and demand, but obviously there are individual town cities where I would argue that's not the case. Historically places like Newcastle have seen a very large increase in the supply of PBSA, and I think it's fair to say that market has become saturated with PBSA. But the counter to that is in locations that have good universities, strong demand growth, yet very little pipeline now, those towns and cities, it is cyclical. So I think we will see instances where the likes of Newcastle start to become attractive again from a investment or development standpoint?
So yeah, in Scotland, so a new piece of legislation post-COVID after the pandemic came in, colloquially referred to as Bill 2. Essentially what it means is it aligns the sort of resi sector with PBSA, and students can now cancel their booking or reservation or tenancy by giving notice, essentially for a reason related to COVID, which is a bit ambiguous, and operators have found it quite challenging actually to kind of interpret that, and universities have been essentially putting pressure on operators to get their interpretation sort of and the student unions interpretation aligned with what the legislation might be saying. And this has had a big impact actually, especially in around summer of 2020, where as soon as the legislation came in and there was hesitancy amongst some universities and offering online learning, cancelling courses, etc. A lot of international students, for example, in Glasgow, cancelled their bookings. So we were fully booked by July, and in August, after some hesitancy and course rearrangements, we lost over 200 bookings out of 600, which was absolutely catastrophic. And this played out throughout the market essentially, and there was a little bit of a panic. And what happened in that specific market was that Glasgow University offered January to January courses. So we, did the smart thing and immediately pivoted to that January course. And then essentially we were about 50% booked for the first term and 100% booked from semester 2. But then the semester 2 lockdowns happened, and what happened there was students, domestic students essentially, who were in the city came in, started to give their notices. So you started to see more voids in properties with heavy domestic demand, and more void in those properties than typically higher end properties, which had pegged to the international market because they simply couldn't go home.
The outlook, I think, for the whole sector is still very good. We are cousins, the HMO and the PBSA sector, but they're the rich cousins and we're the poor cousins. And at some stage, hopefully we'll catch up. But it is all about attracting institutional money into the HMO market. And so far, private equity is in the vanguard of starting to build a proper presence in our market. But we need to try to find some more traditional investors to try to help grow it and compete, because it is a very, very sizable market. The big USP, I think, is for the HMO sector is this Article 4 directive, which means that the very simple supply and demand equation is massively in favor of owning HMO stock going forward. And that can only mean that the yields will continue to come down, to tighten, and prices of the assets will go up, for which you are being paid a very decent dividend to hold an accreting asset. That strikes me as attractive for the medium to long term.
It's also perhaps the HMO sector will drive PBSA yields, because historically PBSA yields have been slightly discounted because they're not break-upable, they're not houses, they're not capable of being sold individually. So I think there's been a bit of a discount, but now we've got the HMO market firing on all cylinders, and the co-living markets now really coming forward, and the buy-to-let market with huge investment coming in. The student market looks to be valued soft relative to these cousins as you describe them, and I think that will cause yield compression across the sector.
Yeah, let's hope.
For us, I think as an operator, the biggest challenge that our customers tell us is the sort of mental health time bomb that's waiting for us. Every single survey over the last 3 years, the number of concerns has just been going up double digits, essentially, in terms of percentage. And how operators respond to this, we'll see. Ourselves, we've already been proactive in that, we've partnered up with a mental health counseling provider for all our students that they can have access to. I see things going that way more in the future, because there's pressure on university services, there's pressure on GPs and NHS services as well. So I think the sector probably will have to step up and provide more.
Yeah, obviously we've pretty much touched on all the positives in terms of broader demographics in the market. I think the biggest challenge the industry faces is how does it address the demand? So obviously we have this rise in 18-year-olds, and obviously internationals are continuing to come, and as Fathi's already mentioned, the attractiveness of the UK higher education sector that's going to remain. I think that's not in question at all. So then it's really a question of how do we meet the demand? Obviously for domestic students at the moment, HMOs really accommodate the bulk of those. But again, Calum's touched on Article 4s. Obviously, it's very difficult to bring new HMO supply to the sector. So for domestic students, whilst HMOs do currently provide a more affordable option, if rents keep increasing as they have done historically, you start to question whether even HMO accommodation starts to become unaffordable for domestic students. Obviously, PBSA, I think, will benefit from that. You'll get some spillover where perhaps the spreads between HMO rents and PBSA rents narrow, but that's really going to depend on each individual location. Obviously, in the locations where those spreads are tight, obviously you'd expect PBSA demand to perhaps be even stronger. And also you've got construction costs. I think we're all pretty familiar with how much they've increased over the last 12 to 18 months. And again, that raises short-term and long-term questions over how we can deliver accommodation that is addressing that demand, and not just international demand, but also at a price point that is viable for domestic students. Currently, I think the average PBSA cost in the UK is about £160 per person per week. That's well above the average maintenance loan for a domestic student. So how do those domestic students bridge that gap is a key question, which I don't think there's any easy answers to. And obviously most councils across the country are very keen to try and move students out of HMOs. But again, if that spread is particularly high, that's much easier said than done.